Also have to get our first corporate conversation going for the day. Now, we've been speaking to, of course, a lot of banks and NBFCs over the last few days and weeks to understand how they're being impacted by the RBI measures on unsecured lending. We have now with us Lakshmipathy Deenadayalan, Chairman and MD at Five Star Business Finance, to talk about, of course, their business outlook for the new year and also how some of these regulatory measures are playing out. So thanks for joining in, and season's greetings to you. So that question really first, now it's been a couple of weeks since the RBI tightened its screws on both on the unsecured portfolio of banks and also the loans that banks are giving to NBFCs. Has this started showing up for you in any way in terms of your cost of funds? What are banks telling you when you are talking to them about fresh lines of funding?
Yeah, thank you for this. Let me start with a very clear note to the viewers that Five Star is a 100% secured lender. So we don't have any unsecured portfolio in our book. We lend to small shopkeepers, self-employed of this country who are not being lent by the formal lenders. We are getting into that market and doing it very successfully for the last 20 years. So all the loans are backed by hard collateral. 95% of the loans are backed by the self-occupied residential property where the applicant family members live in, and 5% can be the commercial property or some vacant lands. So first point, let me be very clear. Five Star is a fully secured loan lender. So as you rightly said, RBI's concerns are more towards unsecured loans, short-term loans. So Five Star doesn't get into this bracket of unsecured loans and short-term loans. Our loans are for 7 years for business use and housing end use. On the second point...
Yes, sir. Please go on the cost of funds for you.
Yes, I'm coming there. Yes, RBI's new circular, banks lending to NBFCs in total, risk weightage has gone up. We were in last quarter, September quarter, our incremental cost of fund was 9.5% and book cost of fund was 9.7%. Almost 3 months have gone after the circular has hit banks and NBFCs. We have raised close to 1,000 crores in last 90 days. We are borrowing at 9.59. So there is a 9 bips increase. But what guidance we have been giving to the market till these things get settled, the cost of funds for Five Star will move up 25 to 35 bips in total.
Okay. Mr. Deenadayalan, good morning. Prashant this side. Season's greetings. Good to have you with us here on CNBC-TV18. What is the last trading day for 2023? Just to, so NIMs will be where, sir? I mean, I think the last time you were on, you were saying that spreads should be between 12 and 13%, NIMs between 14 and 15%. Is that, is there any change to it?
Yeah. Good morning, Prashant. I remember the question, what you asked on NIMs contraction. So the NIMs contraction will happen in Five Star. I just wanted to repeat that. The NIMs contraction in Five Star will happen because the leverage is going to pick up. So more and more debt we borrow, the NIM contraction will happen. On the steady state, what we are guiding to the market 3 years, 4 years down the line, our spreads will be at 12-13% and NIMs will be around 14-15%.
What about sort of loan guidance, sir? Is there any change to that? I think it was 30%, the last communication to the market.
Yeah, no change on that. We'll be growing at 30% for this financial year. And next financial year also, we hope to grow at 30%.
Sir, I'm just repeating the numbers to make sure that we have them right. You said cost of funds will move up by 25 to 35 basis points, right? And that is what, over the next how many quarters?
Maybe you can take next 2 to 3 quarters till this gets settled. Maybe we will also see the rate cut kicking in from August, September next financial year. So I think that will get moderated. So you can take it for next 2 to 3 quarters.
And NIMs in a range of 14 to 15%. Again, is that a guidance for the same period? This 2 to 3
No.
quarter period over?
No, this is at a steady state what we are giving to the market. It's 3 years down the line. Our NIMs for this year and next year will be in the same range of around 17 to 18%.
So, does the demand from the sort of, the small business loan segment, shopkeepers, etc., self-employed, is that as robust as ever? Is that picking up? I mean, what's going on? Just some qualitative, yeah.
Yeah, it has picked up very strongly, Prashant. That's what we have been guiding to the market. We have close to 475 branches across 9 states. The inputs what we get from the ground side is the demand is robust. That's why we did a 37% growth last year, and we continue to do that strong growth years to come. So we feel there's a very strong demand, and this is a very niche segment. Not many players are into it, and I think as long as Five-Star grows thoughtfully on reaching the customer, underwriting the customer, and collecting back the EMIs from them, we see a very strong demand at the ground level.
Okay, all right, Mr. Deenadayalan, we will leave it on that note. Thank you very much for joining in and giving us a lot of clarity on just how cost of funds and how margins will shape up in the medium term. Thank you for being with us, and wish you a very happy new year in advance.